Welcome and thanks for joining us on EMII.com. I'm Caitlin Sisney with your Asset Management Report. Today is Monday, March 10th, 2008. Benefiting from the longest rally since 2000, Japan's foreign reserves climbed above $1 trillion. According to Bloomberg News, official currency holdings climbed to a record $1.01 trillion as of February 29th. Japan's reserves have swelled 5 times in the past decade as the ministry bought U.S. treasuries and other securities to contain gains in the yen. The size of Japan's holdings may prompt ruling party makers to step up calls for sovereign wealth fund to boost returns on state assets. But Japan may have a harder time establishing a fund than its neighbors in Asia because the reserves were built up by selling trillions of yen in government bills rather than from cash inflows. Staying with asset management news, New York-based Finvest Asset Management is looking to add 15 emerging managers to its $250 million Finvest Yankee platform this year. The platform now invests in 21 underlying managers, reports FinAlternatives.com. The U.S.-centric fund, which allocates between $5 and $20 million to each emerging manager in a managed account format, currently has exposure to equity strategies including convertible arbitrage, equity market neutral, event-driven, distressed, and others. And in other asset management news, if traders at Dresdner Bank's Allianz had followed the advice of money managers at its Pimco division, it might have saved shareholders $45 billion. According to Bloomberg News, Pacific Investment Management Company warned that losses in subprime mortgages could infect the whole financial industry last year. While Allianz's insurance unit sidestepped the subprime trap, the Dresden Bank subsidiary reported about $2.6 billion of home loan write-downs, more than larger German rivals Deutsche Bank and Commerzbank. Allianz lost 29 billion euros of market value since June, even as the asset management unit led by Newport Beach, California-based Pimco reported record profits. And in more asset management news, Carlyle Group has been affected by the ruin of the subprime mortgage market. According to Bloomberg News, trading in Carlyle Capital Corporation, the firm's mortgage bond fund, was suspended in Amsterdam Friday after creditors forced the sale of some holdings. The fund expects to receive further margin calls, which could deplete its capital. The fund suspension is a rare setback for Carlyle founder David Rubenstein as he tries to follow rivals in tapping public market for capital. Carlyle itself had been considering going public before the credit market gyrations and resulting slump in buyout activity cooled discussions. And that rounds out today's Asset Management Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Asset Management channel online and read the latest developments.